Alright, good morning. So this video will be a two-in-one video. We'll be discussing specifically on journaling, the importance of proper journaling, which is a documentation of your your pre-intended move for the day and also your previous and the activities, and also journaling the activities that was done for the day in relations to trading. So as we start that, let's delineate the PDRAs that is showing here on the weekly chart for the dollar. So starting from the dollar, we can see this long week here. So the midpoint of this week here, which is the consequent encroachment, this is a premium PDRA, and this recent swing here, you have candle, these three candles formation here. So this uh, lowest low here is the swing low. So you draw this out in time and you indicate this as the previous week's low. The previous week's low. So you have this here during the since the 30th of September, which is the last week of September, we've been rallying higher. And if you've been with us since the previous year, you'd notice that we've been targeting this relative equal highs here since the going into Q4 of the previous year. And inversely, for the euro, we've been expecting lower prices long term. So we've had this buy program here, meaning long term, the order flow from the higher time frame for the US dollar has been bullish. Now, all of this narrative being drawn now from the beginning of this video till the end of the video, it will be significant for tomorrow CPI's release, because tomorrow, Wednesday's trading, we're having CPI news release by 8:30 a.m. for the US dollar. So let's continue. Now on the daily time frame, we have this right here. Price rallied high here to mitigate this sell position here. This sell position was mitigated here, and then price dropped lower, making this a rejection candle. Price rejected these highs here, then dropped lower. So we have this equal lows here, this relative equal lows. The sell side liquidity that was gotten from the weekly time frame is now being transposed here on the daily time frame as relative equal lows. So we are going to wait because we are currently trading around around these significant PDRAs. You have buy side liquidity, you have this premium PDRAs resting above this current market price, and you also have this relative equal lows resting below this current market price. Now, favorable personally to me, I would want us to come for this low, which is Friday's trading's low, and then we'll see how we would like to come for these lows also. That doesn't mean I'm calling for a top on the dollar. This is because now I'm going to bring out a chart, which is the US bond market. So for the US bond market, we have this. Remember, the dollar is ranging and the bond market has been rallying higher, meaning there's a there's a decoupling from the market that took place earlier within this generalist trading, which is normal because during generalist trading, the market uses that whole month of trading to engineer sentiment going into the remainder of the year because traders coming out from the holiday from the previous year, there would be rebalancing and re- understanding and reorganizing their schedule. So for that reason, they will be more focused on placing trades instead of understanding narratives and would want to capitalize on this im- impatience in traders. Now, for the bond market, we have this had a higher, and for the dollar, we've had a a choppy dollar going lower because when you're expecting this is the low I'm talking about, but it is more of a ranging price action. When you have the dollar not being inversely correlated to the bond market, you have this decoupling. It is a decoupled market. So you'd want to wait and get a feel for where the normal movement of the normal symmetry, which is well known and understood in the marketplace, is being seen again in a body of price action. Now, what do I mean by this? I mean, you'd want to see the dollar doing the direct opposite of what the bond market is doing. So, if you're having higher bonds, you are expecting lower dollar. So, until we get that, for likely during the CPI trading tomorrow, the markets will be completely coupled together and would have a smoother and clearer price action going into the rest of the week and through Q1 and into Q2. So now on the daily time frame, you've had this drop in price. After price rejected from this swing point, price dropped lower and left this imbalance here. So right here it's a daily CBI. So you have this daily CB and just under it you have this daily CB low. Now we're currently trading inside of this imbalance on the daily time frame, the daily CBI and the daily CB's low, which is when price dropped lower here, we had this sell side imbalance and buy side inefficiency, meaning the imbalance is on the sell side, lacking in buy side delivery. So for Monday's trading, which is the previous day's trading, we rallied inside of it and we had this close at the CB's high. Now let's look further. This is just us trying to get a feel for the weekly narrative to understand what the week's trading is trying to do based on the economic calendar because we'll be having CPI. This is a CPI's week. So you have this new week opening gap here. We're also trading currently inside of a new week opening gap. Remember, from the previous week, it was indicated to you that when you have this type of range, this type of opening range here from a new week opening gap, you expect a significant portion of that week to be a ranging week, ranging in a one-sided direction. The previous week you have this and price dropped lower on Tuesday's trading and we had this ranging in price ranging back and forth. This is what this is the kind of price action you have to expect when trading inside when you're trading inside of a current new week opening gap that is well extended as it is like this. Now you have a new week opening gap also resting inside of a daily CB. Now, what is paramount currently to my eyes? I do not like these lows here. These lows are clean lows, and this high, I am not satisfied that this is the market making a top for the dollar, unless stated otherwise. Now, back to journaling. Most of the times, as traders, we we feel we can remember all the intricacies, all the points, the prices in the body of price action in an asset class, which is extremely wrong because our memories are fleeting, are constantly fleeting away. So, for that reason, I would want to see this high become rejected. If this up close, this down close candle here acts, we see a rejection of price going into New York session. Price rejects from this candle. I would expect these lows to be our target. These lows here and likely these lows because as you can see, we have these relative equal lows from the previous Friday's trading. Let's outline this. This is I'll make a part two of this video that will be solely talking about the importance of proper journaling. Now, when you journal a narrative that has been predetermined by you, it helps you to go into the market with a clear goal, with a clear, actionable points that you are trying to execute in the market. This will prevent you from jumping the ship and going against your well written out plan. You see, this set of actions that you've planned to take while as you come into the marketplace, this will guide you from following a rule based idea, a rule based move. And for you to be able to understand this rule based move, you would have to have copies of copies of entries. These entries techniques, they should be well identical, leaving almost no room for any ambiguity. Leaving almost no room for any ambiguity. This will help you in determining and having a clear direction bias, that like a clear discernible bias in your mind, so you do not be jumping from a buyer to a seller quickly and changing your bias too quick, being trading in a haphazard environment. Does that make sense? So that's it. I'll make a more definitive video on journaling. This is just a quick recap and a quick forecast into this week's trading. So also, you'd want to know the midpoint of this daily CB, which is the consequent encroachment of this CB. So you have this consequent encroachment of this daily CB. That is a PDRA I would want us to pay attention to. So let's take a quick look at the US 500, which is the CFD for the S&P market. So let's quickly do that right now. US, this will be a very quick one. All right. So for the previous week, we only had this one trade. We sold here. Let's take this out. These are distractions. All right. So as you can see, we've been ranging. This is a this is the kind of market environment we were talking about earlier. Doing generalized trading, the market makers create sentiment on both sides of the market, on buy side and sell side, creating this range bound price action. As you can see, from the close of the previous year, we've been ranging price, broke out of this range, went into a range bound price action again. So that is that. Now on the 4 hour time frame, we're going to start from the 4 hour time frame using the narrative, the inverse narrative we just use currently on the dollar. Now we've had this drop in price on the previous week's Friday. This we are currently trading inside of this CB, which is so we have this 4 hour CBI, and yeah, you have a 4 hour CB low. Let's take out the 4 hour. So we're currently trading inside of this imbalance here as we go as we anticipate the CPI news release by tomorrow 8:30 a.m. Now I would not want I'm not interested in doing anything for the day until after CPI. Does that make sense? Because we're currently trading inside of a range, inside of a PDRA's range, which you can have this act as a bearish order block after taking out this high. This can be a bearish order block seeking for lower prices, and also you can frame a bias for bullishness coming for these highs and these relative equal highs. So anytime and every time you have this kind of criteria that can give you a bias for both sides of the market, this is indicative of a lower probability trade setup. And unless you're a new trader, it is advisable for you to not waste your time um, trying to trade this market environment. But if you're a new trader, it's advisable for you. This is a suggestion. It is a suggestion and my firm belief that taping this type of price action it will help you better understand what goes on inside of this undecisiveness in price, how the algorithm generates sentiment inside of these undecisive settings. So you just need a far level of greater self control and self awareness compared to other market participants. So that way you do not self sabotage yourself by taking trades that you did not plan for, that it is out of your journal material and anything like that. So going time is currently 5:01 a.m. The close of the AM, the New York AM, sorry, the London A session Q window. And at this point in time, I'm currently not interested in doing anything, whether being a buyer or a seller, until after the CPI news release tomorrow. So I hope you got something from this video. I'll talk to you during the CPI session or before the CPI session what as we get the price action data for today's trading to further understand and get a feel for what the CPI is likely to unleash. So have a nice day and good luck, good trading.